Um,
All right, well, let's get this thing kicked off. We're very excited to be here for the Lunch and Learn. I just wanted to ask, where's everybody coming from? We've got, I see Carl in there, Tyler, Eric, Micah. Good to have you guys here. As we go through this, just to make this as productive as possible, if you guys have any questions, please don't save them to the end. We want to hear them. So either unmute yourself or you can post them in the chat. I'm going to be watching that, and either I'll answer there or I'll ask on your behalf. Or again, just raise your hand. You can unmute and then ask your question. We want to make sure that all of your questions get answered, that we provide as much value and education as possible during this. And I got to tell you, it's going to be a lot of great stuff. I've had the pleasure of working alongside Michael Smith. He came from a completely different industry and is bringing all of his knowledge and experience to share with you guys today. So I'll let him talk about that in more detail. And yeah, with that, let's get started.
Thank you, Kent, very much. And it's a privilege to be here, everybody. Thank you. We have a very short period of time and a whole lot of fun things to talk about. So I have learned to slow down and pace the great stuff that we get to talk about. It's probably still going to be a lot of information. So please wave at Kent and we'll try to pause and answer questions along the way. Lots of changes happening around us, around our industry, inside of our industry. Trends that are developing that we need to know about, whether we want to participate in them. We should at least know this is going on 5, 10, 15 years out. It's our opinion strongly that this industry is not going to look the same as it does today. So this is a privilege to share some of these thoughts with you. Everybody take it or leave it, right? I have lots to say and you can disagree with some or all of it. Take what you want, use it to help you as you can. And, we're here, part of why we're here sharing it with you, we're here ongoing, is to be able to support you in your questions and as you go forward. Down at the very bottom in the footer of every page is my email and my phone, my mobile. So if you have any questions following, we'd be happy to follow up with you. And at this point, we'll just dig right in. We're going to go along, as we said, answer questions along the way. We'll probably try to wrap about 5 minutes to go, maybe 10. For a sort of a pack of questions at the end for those that want to go ahead and save your questions till then. So off we go. This is really a trend presentation and we want to walk you through the high level and give you lots of stuff to think about. So thanks again for letting me be here. Now I just have to make this thing move forward. So. All right. Just a little bit of backgrounds for those of you who don't know me. I did not grow up in this industry. There's a pro and a con to that. There's a lot of stuff con-wise that you all know that I've been hanging around here 7 going on 8 years at this point. But you who've been in this, the folks that are here 20, 30 years, you have experience under your belt that I'm privileged to stand next to. I did do for the last 43 years, lots of the stuff in the first set of bullets, a lot of strategy work, a lot of growth oriented work. Was a part of a holding company, private equity type company for a while. Lots of exit and succession work with my clients, high performance work, growth work. And in addition to that, this whole private equity thing that's coming, which we're going to touch on here in a little bit. I, again, grew up outside. I'm now, in addition to having come from outside this industry, spent time at Deloitte, other large consulting firms in the Fortune 100. Also, now I'm the chief strategy officer here at the Institute. Met Kent and Cecil about a year and a half ago, maybe 2 years. Started talking about the future of the industry, the strength that we have to help, the industry have been strong to date, and how to put those two things together to help this industry to move into its future. So have a little bit of a different educational background, and it's a privilege to share again with you guys what we're doing here today. So just want you to know who I am. My perspectives come from outside the industry, and please take that for what it's worth. There's a couple of big things I want to leave as takeaways today. The change that's in the aftermarket here with us is accelerating, and it ain't going away, in our opinion. You guys are going to need breakthrough strategies. It's not going to be business as usual, probably never has been, but boy, in the future, things are going to accelerate and change quickly. And so we want you to stay out ahead of that and be thinking, I can't keep doing it the same way. I got to keep thinking what the next phase looks like. And the last thing is that we're firm believers that your greatest power lever in your business is human. And this industry has grown up focusing a lot on sales at the front desk, shop repairs in the back, and the financials of the industry. You got to have that as a stable baseline, but the human factor is the next great lever. And when you can turn that on, your results jump, and you put yourself in a position to do a lot of what's coming in a very effective way. So those are the key takeaways that we had that we wanted to share with you today. There are 7 trends we're going to talk about, and we're going to go through them briefly, each one. I'm going to start with the technology changes, most of which you guys will know about, but want to set a baseline perspective of how the OEMs are thinking about this, which will affect us not too far out. I want to talk about what's happening inside the aftermarket with consolidation, baby boomers, and those kind of things. Then we're going to jump to the outside investors who are looking to participate in and be the recipients of the aftermarket consolidation. We're going to jump back over to competitive advantage. I always have to touch base here, and you'll see where it's relevant in a bit. Going to talk about being human-centric, a mastery-driven model. This idea that humans are your greatest competitive edge, and what are we talking about when we mention that to you? Going to talk about mastery and how that affects our industry and how to leverage that for your future opportunities. And finally, we're going to talk about you each having your own unique breakthrough strategy and developing it to get there. If you're going to need it like you've never needed it before in the future, and we kind of want to touch base on what we mean by that. So 7 trends, about 49 minutes. I got about 7 minutes each, so got to keep this thing moving. And by the way, I'm not going to go too deep into any of them because this is just a teeny little window that we get to peek through together for now. So let me dive in, starting with technology. We all know that technology is changing in this industry as the large strategy firms like Deloitte, where I came from, McKinsey, work with the OEMs, the Fords, the Daimler Benzes, the GMs. These are the things that they're talking about. These are the 10 trends that they're paying attention to. The first bucket is changes in customer expectations and value generation. Digitization of channels and the interfaces is high on their list. Big data and analytics we know about. We have to try to keep figuring out how to protect ourselves in that. But the cars are talking a whole lot to the OEMs after they leave the factory. And they're figuring out more and more ways to use that data for their benefit. The increasing importance of professionally managed fleets. I'm going to tell you that in the future, the questions of whether the Ubers and the Amazons become the great fleets of autonomous vehicles or even just rideshare, that concept of the fleets and who services the fleets as individual ownership shrinks in the decades to come and fleets become bigger in the days to come. The OEMs are very aware of the fact that their retail market is changing to a wholesale market. So they're working on that right now in terms of what they want to, that's going to look like and what they need to be to respond to that. Obviously, there's a rise of emerging markets and a new service mindset that they're paying attention to. The second bucket is the emergence of the next generation vehicles. Is electrification the thing? Right now, it's shrinking the profit pool, right? There's great pressure from government, great pressure from the super largest investment firms to do this global protection, global climate protection by electrifying. We could have a whole session on whether that makes any sense or not, and we'll all have our own opinions, but the reality is there's a lot of activity. The biggest consulting and investment firms are pressuring the OEMs to head for electric. They've been saying they would, they've been trying, they're not making any money at it. There's still great engineering issues, which we know about, but that topic is hot on the table of what is that next generation going to look like. There's an increasing importance of software. Guys, we do it every day. Every year, these cars come off with more complications, more programming that needs to be done. And they see that as a little angle to try to keep us out, by the way, just so you know, in case you hadn't figured that out. Autonomous is leading to fewer accidents, but shorter maintenance intervals. How far are we going to go with that? When, in what parts of the country, how far, and will it be all the way across the economy, all the way out to rural or not? Huge questions in that, but it's front, mind, and center for the OEMs. Connected vehicles enabling predictive maintenance, right? Can they call their cars back so that before they even know they have a problem, they drive it straight back to, if there is a dealership model at that point, OEMs would like that to happen, right? And the last bucket is shifts in competitive power. Guys, there are new players entering the market, not just the EV companies that we've seen that are struggling at this point, if you've been paying attention to the news. But Apple, for example, is building an electric car with another software company, not with a car company. So there's a lot of weird stuff happening out there, and the big old traditional players know that. Last thing here on the list that they're looking at is further acceleration of industry consolidation and integration. In a couple of slides, I'm going to show you that the automotive manufacturers are consolidating. The brands are rolling up to greater owners. The dealerships themselves are rolling up from individual franchise ownership to consolidated groups. Just like collision is done as our cousin in the industry, we're standing in front of that in our own industry as well. So this consolidation game is going on all around us in everything related to automotive, and this is going to have an impact, and we'll talk about that in a couple of minutes. The four primary technology drivers that the strategists and the OEMs talk about are connectivity, alternative drivetrains, whatever that looks like, shared mobility, this Uber, call a car, don't own a car, and autonomous driving. And the scale of autonomy, we all know there's multiple levels of ADAS, and will we get to the full final mega city, no driver cars allowed kind of a model? Who knows, right? Those of you who are attentive to this, 15-minute cities means no cars at all. If there are cars, they ain't going to be driven by guys like us. So these are the things that are the top bucket in here. They call this CASA, connectivity, alternative, shared, and autonomous, CASA. And that's their short key phrase for that. And it plays out for them this way. There's a way that they're trying to understand their future. And I'll explain this to you in a second. The degree of OEM dominance in the changes that are coming is the x-axis, or the one that goes horizontally across the middle of the page. On the right side is that the OEMs are able to control all user touch points in the prior slides that I've shown you. On the left side, the extreme outsiders control all of those user touch points. Their preference, obviously, at the OEM level would be to be as far to the right as possible. The degree of emergence of these trends, these CASA trends, are they're either going to go fast or they're going to go slow. So if they go fast, which is at the top of the y-axis or the upward downward arrow, that means, where the OEMs would like to be, guys, is in the quadrant that's on the top right side. They want to shape the new mobility environment. They want to control the touch points, and they want to be the masters of these trends that are forming technologically and have those in their hands under their control. It's less interesting to them to come down the right side. It's their second choice would be to say, okay, if it doesn't move fast, so we can grab it quickly and own it. If it moves slow, we still want to grab it and own it, right? That makes sense. Less attractive to them, again, is going straight across the bottom. If it's not going to go fast and we can't control all of it, at least let's control as many points as we can. And the worst case for them is if it goes fast and they lose control and they don't have control of the touch points. And then they are basically a vendor into the automotive transportation system, and they've lost great profits. And I've got these descriptions, which I'm not going to pause to do here for other presentations, but I'll say this: that's what they want. And we'll read this one, right? The OEM owns a user-centered ecosystem of all products and services in traditional and new business segments. It's a leading player across mobility on demand offerings and has leveraged its user touch points to generate revenues from data as a service. They want to own the market. This is why. Look at the profit differential for the automotive OEMs if they do. It's $34 billion in profit. The light blue box in the top right quadrant says $34 billion. You come down and remember they're losing control. It's moving slower. Their profits drop to 22. If they lose control of the touch points and it's slower, that's down to 6. And if they've lost control of everything and it moves fast, they're down to 5. So you can see what's on the table for them. If they don't control this, their businesses are going to shrink significantly. And, there's a US column in there, there's a China column in there, a European and Japan, and there are, of course, other places in the world that sell cars too. But you can see why the OEMs have this stuff on the table. If they don't play this right, they're going to lose their businesses right out from under their backsides, right? And you guys, I just want you to know this, right? What they do will eventually affect us, and if it doesn't in the short run too. What's in their target sites also is the distribution model of dealerships. And that does have a heavy impact on us. You can see the trending estimates going into 2030, the different aspects of the dealership model. Most of the trends are downward. The only upward trend is that in a digital scenario, the dealerships will have to be more sophisticated in their digital back office. But here's the concept here, guys. The dealership model is dying and the OEMs know it. Kids, and I say kids, you know, people under 30, for example, and I only can remember those days at 64. The kids don't want to sit in a dealership office and wait for finance to tell them what their car is going to cost. They don't do the finagling thing. They don't like that process. They'd rather buy a car online for a fixed price and have it delivered to their front door. The dealership model is dying. So what's happening then in the dealership world is all these privately owned dealerships that were franchised from the Fords or the Chevys or the Hyundais or whatever, you know, they may have a celebrity or a sports celebrity's name on them. That may have been who originally owned the franchise, but now there are huge consolidation machines out there that are buying up dealerships. And their game is to consolidate power in the distribution model of dealerships so that when dealerships go away, they are the distribution players to be able to then decide where do we take it from here. So what you see is that the dealership feeder model for the OEMs is not only fading, but it may be separating from them and turning into something different. So pause to reflect on that for a second, right? It's not just about where do we go to get, you know, dealer specific parts. It's also this whole issue of having a dealer service department down the street that we compete with at the top end, potentially, you know, fading and going away. And what does that mean? It means this, that in the aftermarket of the OEMs, that column of profits that are shown there, 8.8% of the dealership world comes, in other words, what we do in their world, the service that we do is the tail on their dog, and it ain't worth much in terms of their total revenue. In other words, if their service departments went away, it wouldn't hurt us at all. Wouldn't hurt them at all. It would be good for us if they did that. So back to the baseline here, the OEMs are struggling to find the future. It puts their distribution model in question, and it certainly puts their service model in question in the next 10, 15 years that are coming. All right. Whew. All right. That's a lot of information for trend one. It won't be quite that deep on the other ones, but that's really a baseline. Can't you wave it at me?
I was going to say, do we have any questions
great question.
that anybody has after that first data dump there?
Yeah.
If you do, again, we've got the chat, but you're welcome to ask it right now. All right, let's get moving.
All right. If you think of something, folks, go ahead and put it in the conversation for Kent, and he'll be waving at me here online. So, you got anything, Kent, or shall I move on?
I do just want to make a short note that I heard from a little birdie that it's Micah's birthday today. So happy birthday!
Happy birthday, Micah! Love it. All right, let's do trend two: aftermarket consolidation. This is a big one, guys. This is the industry that we live in. There are, and those of you who've seen the slide, walk through me with them. Some of you have not, and I want you to see this and understand it. In all U.S. privately held businesses, of which we are a subsegment, there are about 6 million of those in the U.S. And of that, it's estimated that there are about 2/3 of our privately held U.S. businesses that are baby boomer owned. That 4 million plus businesses is worth about 10 trillion in U.S. wealth. What that means, the baby boomers are this year aged between 60 and 78, right? I'm 64. I'm on the tail end of the baby boomers. Those guys that have been hanging around for a while that are in this business want to get out. In 2016, and think about that, we're 8 years out from that. COVID got in the way, and I'll talk about that in a minute. But in 2016, half of these guys wanted to be out of their business in the next 1 to 2 years. That would have been by 2018. And 76% or 3/4 wanted to be out within 5. That's 3 years ago. So there's a backup here of baby boomers ready to get out of all industries. And there's some guesstimate of whether we have even more baby boomers in our industry than they do. So what it implies is there's a huge change in turnover coming in the near years to come of ownership. And what does that mean? We're going to unpack that here in a minute. The sad part is of a piece of component that y'all need to know is that the private equity world, the professional investment world estimates that of all those 4 million plus baby boomer owned private businesses, that somewhere between 80 and 85% of them have not been run in such a way, value has not been built in such a way that anyone will want to buy them. So think about that, guys. That's 3.2 million businesses or 8 trillion in wealth that don't have enough value in them for anybody who's a professional investor to even take a look at. It's kind of a scary number. What it means in our industry is if, with round numbers, we think there are about 235,000 companies that do what we do in 23. So keep that number, maybe hold it for 24. That's about 160,000 boomer-owned businesses if it's the 67%. That means that at an 80% failure rate, if that's true, we've got about 125, 126,000 competitors, or 55% of our industry that isn't valuable enough, that's in the hands of a baby boomer to sell, will simply close its doors in the next 3 to 5 years. Now, maybe they'll turn around and sell it to their key leaders for a discount. The key leaders will pick it up, right? The top foreman in the shop, the service advisor who's the lead, whatever, but it'll be below market value, and it'll essentially, from an investor perspective, be a struggling business. So the point of this, folks, is there's a lot of turnover and change coming, and it has a baby boomer tied to it. And the thing that doesn't go away is aging. Trust me, I know, right? You keep getting older, and so this is going to be with us. And COVID slowed it down along the way. The government showed up and said, hey, you're essential businesses. Take our loans, put them in the bank, wait till we see what's going to happen. A bunch of baby boomers who might have gotten out according to those 2016 statistics might be gone by now, but they're not. They're still here now trying to figure out what to do. When do I pay back those loans if I haven't? How do I sell this thing? With all this change that's coming, what do I do with my business? It means, folks, that as this shifts in front of us, those of us that are left have an amazing opportunity with regard to the employees, the customers, and the markets that all of these exiting baby boomers have put up for grabs, right? The baseline of what we're sitting in the middle of will change right in front of us, and the opportunities are off the charts if you can figure out how to take advantage of it. And I say advantage from an economic perspective, not a taking advantage of a human being perspective, okay? I mean that from economics view. All right, here's a little bit of a scary slide, and I just want you to see it for you owners who are here. And this can be older owners, it could be younger owners, it could be guys that want to be owners. Let's look at this and see it. Excuse me. Owner exits. 50% wanted out, 75% wanted out, in 16, right? But here's the thing. 80% of owners have 90% or more of their net worth tied up in their business. Here's the statistics from the Exit Strategy Institute. 67% of owners don't even know what their exit options are. And I'm going to tell you in a couple of slides, you got more options in front of you now than we had 10 years ago. So we'll talk about that in a minute. But look at the statistics. No formal transition team, no written transition plan. Half of them have done no planning at all about retirement. And I mean any age at all, right? Almost 100% of them, 93, have no formal life after business plan. Guys, that's dangerous, right? Not to know what you're going to do after retirement it's literally a physically dangerous thing. People who don't have a plan after they retire, I'm not kidding you, tend to die early. So part of thinking about retirement and exit is, what do I want to do when I'm done? How long do I want to live? Not how long will I live, but where do I want to live? What do I want to do? How much money do I need to take out of this business before I go? And if you don't think about that, you just exit with whatever you've got in your hand, that puts tremendous pressure on somebody to put 35 years in an industry and walk out of their business with 125 grand in a transaction price. That's not a lot of money to live on from age 67 on, right? So this is why this stuff matters. We want you to be thinking about this regardless of how old you are. 40% have no plans if something goes wrong along the way to this exit. And here's a key number. 3/4 of business owners profoundly regret exiting within 12 months of doing it because they did it so poorly. And if you think, by the way, that family business transactions are a turnkey solution, they're not. And here's why. Through the successful end of the second generation, only 30% of those businesses make it. In other words, there's a 70% failure rate in the hands of the kids of the second generation initial owner, the founder. You go to the third generation, it drops to 12% success rate. And at the fourth and following generations, 97% of the businesses have failed by that point in time. So it doesn't mean turning it over to family doesn't work. What it means is, if that's part of your strategy, you better be getting the kids ready, the grandkids ready for this. If they're interested, do not hand them the keys and pretend like you're going to walk away and they're going to be okay. Statistics say that's not how it works. So this is kind of a wake-up call page to say, I really, regardless of age and status, need to be starting to think about this stuff right now, not later. Here we are with the bell curve of the industry, right? 235,000 players that are underneath the curve here. What this basically means is that when we're looking at all the players that are here, 55% of the industry goes away. There's a couple of points to be made. If they're all the lower performers, and not all of them will be, but let's just imagine that the ones that will tend to go away are the lower performers. If indeed half the industry goes away, the average business of today, which is at the peak of the bell curve, will in the next 5 to 10 to 15 years, if you do things the way you're doing it today, be at the bottom of the bell curve of the future. In other words, we cannot sit still. We have to be focusing on growing into this thing and knowing what it's going to become and doing our best to do what we're doing right now. Talk about trends, talk about futures, talk about planning, try to be creative, and try as owner operators to put our hands on this in a way that we have some control over the manifest destiny of our industry, and not let the finance guys who are coming like a tidal wave come in here and tell us how it's going to be done. And that's kind of the segue into where we're going here. This is the consolidation space. Here's an example of where we're headed, what's happening right now. And this is not at this highest level, but here's the idea, right? If you look anywhere, look at the Coca-Cola, Unilever, Nestle, you can see all the little brands at a retail level that people recognize. And when they buy that company, they don't disrupt the brand. This is called a house of brands model. Nestle owns it, and they have all these holdings. The holdings look like they did, but Nestle owns it. It's what I mentioned about the dealerships before, right? This is where we're headed at this point. That little, and these are the national level ones. We're at the point where little local consolidators or regional national consolidators will start to pick up little individual brands. So this has begun. It isn't well underway yet, but this is what our industry is doing. If you think about collision and what they went through, we're headed into the same thing. And it's not like we can stop it, right? This consolidation is going to happen. The question is, how do we deal with it along the way? Closer to home, here in the automotive business, the same thing's happening with the brands at the OEM level. These big company names on the left are buying up the brands that you see as the names behind them. They're doing the same thing that the dealership consolidators are. They're thinking about, how do I get as much market share as I can in the space that I think it's going to be important, so that I have the biggest say in declaring where this industry goes. All these little brands used to stand on their own. Now they will continue to be consolidated as we go. So again, it doesn't affect us tomorrow. It doesn't affect us in May or June, but it is going to continue to affect us if you're looking 5 years out, certainly 10 years out. And if you're going to be around here, some of you younger folks, 15 years from now, we're going to keep an eye on this stuff. You need to know what it's going to mean. Here's what it means to roll up in an industry. Stage one is kind of where we've been. A few big players, but mostly it's little guys that are just building revenues, your brand, little one-off acquisitions. If you buy one shop, it becomes a second. We used to call that multi-shop. Then stage two is where the initial consolidation platforms occur. That's happened now. Sun Automotive is one of them, was the 800-pound gorilla that started. I will tell you in a minute about the O2 deal that's now called Straightaway Tire and Automotive. I helped put that one together and the guys that are in it. And I'll unpack that one just a teeny bit here on the corner. But we're at that point where the initial platforms have begun. The next stage in the industry is when the little fish get eaten by bigger fish. Mega deals are going on. They start to look at the empty parts of the country where there is no network, and they consider it a greenfield to build one there. And then the final stage is where a couple of companies buy up the majority of an industry. And then that's about, since they own almost all of it, defending it, maintaining it, and managing the regulatory environment. We believe we're right here. So the platforms have formed, but we're just beginning the shakeup of the 235,000 players. So just keep in mind that what's in front of us is stage 2, 3, 4, and the opportunities here for all of us are absolutely unlike anything we've ever seen before in this industry. I said to a bunch of people, a bunch of owners yesterday in a big meeting, I said, listen, this is for such a time as this, right? We have never in this industry been here, and in 10 years, we're never going to be here again. So this is a very exciting time to be here. Please don't let this intimidate you. Look at it instead as the opportunity literally of a lifetime. Every industry goes through this one time, right? And ours, with 50 of them that have been before us, is coming into this season right now. So what a great time to be here, folks. All right, Kent, pause. Questions on that section?
Lot to take in.
Yes, there is. Good times.
Kavita, did you have any questions? You're not okay. Pete, good to see you. Todd, did you have any questions? All right.
See, guys, I'm doing such a good job. You don't even have questions. Either that or I'm going too fast again. I'm trying to slow down. I really am. So
no, our minds are blown. So we're just trying to keep it up, right? Like, see people
right,
nodding. I see Todd nodding. Yes.
I know. It's like, oh my God. Yeah, eyeballs are sticking out, right? So no, this is fantastic stuff. It's not scary stuff because you know what? And I say this over and over. You all are the best business people that I've ever worked with. And I've been in the Fortune 100. And that's where I used to consult, right? And I will tell you, pound for pound, the people in this industry, as difficult as this industry is, you guys are as good a business people as I've worked with in 43 years of doing what I used to do. So I want you to know that, and I want you to take that into your heart. I say that to owner groups, and they're like, what? That can't be. I am telling you, this is such a complicated business, and you do have so many balls to juggle that you do it as well as anybody I've ever seen. So just know that and take that to your hearts, right? If anybody can do this, let me tell you, 50 industry verticals of moms and pops have done this before. Some of them failed, some of them succeeded. We have everything it takes to succeed in mastering this ourselves, not have it be done to us. And you guys have the potential to do it. And that's exactly what we're trying to share with you guys today. So let's talk about this outside investment that's coming and go across the top of this trend number 3. We're not going to spend a ton of time on all this. We got days and weeks and peer groups to study all this at depth. But here's the general concept is this, that the self-fund, this is the capital source model that you'll recognize, right? The very first shop you bought, you probably self-funded it. Maybe you even put your house on the market, or not on the market, but up as collateral to make sure that the bank lets you have a loan. Family and friends, maybe you dipped into that pool. That's kind of the organic pool version 2. And that's say, hey, buddies, hey, mom and pop, I want to do one more. I need a little help. You want to play? You want to be a co-investor with me? Another way folks have done it is owner financing, right? Maybe you bought it from the old owner. And again, isn't that the traditional model? They own the business and the real estate. They want to retire from the business. They sold you the business, maybe with owner financing, and then you made a down payment, and then you paid them off over the time. All during that time, they held the real estate themselves. You rented from them. Then they either die or they get ready to lighten up their portfolio and they sell the property to you. Now you own the business and the real estate, and then you go until you want to get out of the business. That has owner financing featured historically on our industry at a very high level. And if you did it that way, that's great. That's another way to buy something, though, without having to have all the cash, right? It's a lot easier to buy it from an owner as an insider than to go to a bank. Bank is the next level. That's a debt instrument. Investors are equity instruments, right? So here's the deal with banks. They come in layers too. Your retail bank's the one you drive by every day. It may be where you had your loans done. But inside the retail banks are commercial banks. And what that means is that bigger deals don't get done at the retail level. If you will, they get done at the wholesale level is a way to think about it. But what you may not know is that behind the retail and commercial banks are what they call venture banks, and venture banks are the private equity investors that invest in building banks. And so the concept here, and we had one experience with this where we had a client sit with their retail bank who said, no, this project is a commercial bank. Let us bring you to that level. And in the process of describing the project to them, they said, could we introduce you to our private equity investors who are behind our bank? who might be interested in investing in this project straight up as a private equity investor, not through the bank mechanism. And that sets up a whole different set of terms, guys. And that's there, and it's all within the circle of banking. And I will say, it depends on how finely you polish your gem to put it before the bank as to what kind of response you get in that. The next level up and the biggest level up is really getting into the equity markets. Angel investors, I'm not going to unpack all the differences. I will say the private equity folks in particular, second bullet down, are extremely interested in this industry. Those guys have more money to invest than there are projects in the world to invest. And I'm going to tell you the number I last read, which was a reasonably current number, $160 billion plus of what they call dry powder, which is money that they were looking to put into a project, but they don't have a project to put it into. So I kid you not when I say to you that you are the owner of a finely polished gem of a business. Guys, listen to this. You're in charge of that investment discussion. You are not the victim of it. Can I say it? They need you more than you need them. It's kind of hard to imagine when a Morgan Stanley capital finance people at the middle market of private equity walk into your shop and say, please, 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 could we do business together? Can you imagine that? If you can't, hear it from me. You can get yourself there. And they need you more than you need them. So please keep that in your mind. When we talk about building private equity projects to take out to that world and take our industry to them, they are waiting for us to put these projects together. And again, you know, we can help you do that. I don't mean, this is not a sales pitch. I'm saying it's knowledge of how to do this is known. And I'll tell you about an experience I had here just recently in a moment. On the other side of that line is this idea that there will be a pile of people trying to contact you and offering to help you to do this. If you don't get 2 broker letters a week, 3 broker calls, and a potential occasional private equity call, I'd be surprised at this point. Those guys know we're here. And COVID did it to us, right? We knew they were coming. 7 years ago, I got here, 8 years ago. I knew this was coming because this is the world I came from. What happened in the meantime was COVID. COVID, in these guys' terms, all their high-end restaurants blocked up. Nobody came out for dinner, right? Their strip malls, nobody went shopping. A lot of their investments tanked at the private equity, the family office, the investment level. So what happened was their capital backed up on them. And what they started doing was sniffing around for industries that can do pretty well. We have lots of clients that do 20+%, sometimes 30% net profit margins. Those guys found us. They started sniffing around, and number one, we're essential businesses, right? We kept going all the way through it. We were expected to keep going. We all call ourselves recession proof or recession resistance. We know bad times, good times, we can still make money. And now guess what? The private equity guys know it too. So the real estate investment trust, the private equity guys, the brokers, they are going to be guys increasingly all over you to try to attract you to them. All of them are going to tell you, hey, trust me, I'll do the best deal you'll ever see. I'm a good guy, unlike the rest of those guys. Trust me. All I'm going to say to you guys is this concept in Latin, caveat emptor, buyer beware. Okay, be careful. You can take the calls if you want to. If you want to call me and see if you should or what they said or whatever, I'll help you with that. I love doing that too. But the concept of it is this. They tell lots of great stories. Some of them are great guys, but not all of them. So don't just believe that because they walked in the front door and it sounds good, that it is good. Be careful. Okay, that's all I got time to say about that right now. But please be aware. All right. And get ready for the calls because they're coming. Get ready for the emails. They're on their way. This is a familiarity with this, right? I just want you to know, we know how to do this in the industry. Let me put it this way. 50 industry verticals have done this. How to do this is known. This is where I personally grew up. And I'm just going to say, we put one of these together. 5 companies that are listed here, and I built a platform. We took it to private equity, 17 contacts, 3 finalists, a final one that was successful. A new platform was launched. Straightaway Tire and Automotive is one of the newest and largest consolidators in our industry. So here's the point. You can prepare projects to take to these guys that they're unbelievably interested in. We do know how to get the best price out of them for you. I mean, it's known what they're looking for. I'll share a little bit more about that in a few minutes. And by the way, I'm looking at the clock and keep everything moving, but understand that this is where we're headed. We're headed into large investors' arms over time because this industry is going to roll up. So my thing is, I want you to know it. I want you to know how it works. I want you to do your business strategy and planning based on what your thoughts are about how you'd like to walk through this new forest, if you will. And you're always welcome at every moment to change your plan when something new comes up. And that's part of keeping this dynamic. But if you want to hang in there as a single shop, you better have a unique competitive advantage, and you better be able to hold on to it as long as you can. Someday, the majority of you will be in a platform at some point, and your brand will probably be gone. So what's the time frame? What's your preparation? What's your journey through it? And guys, what's your journey out? And that's a huge conversation we should be having today, not 5-10 years from now when it suddenly becomes important to you, okay? Whew, okay, we got lighter trends here to close this thing out on time. Anything, Kent, from you that is pressing, or shall I keep going?
I think we're all right. I think you can keep going.
Fantastic. Okay, competitive advantage. The simple point I want to make is this. When I first got into this industry, I asked a room full of owners, hey, can you guys tell me what your unique competitive advantages are? And I got things like, we've got a 36,000 mile warranty. Ha, we got it better than you. We got 48,000 mile, right? And then we were writing this up on a whiteboard, bullet by bullet, saying, these are your competitive advantage. I said, how many folks in the room have something similar to that? And you guys know where I'm going, right? Every hand went up in the air. I said, well, and I put a big cross through it. I go, that's not a unique competitive advantage. How about the next bullet point? We crossed all of them off until we got to the bottom. And that was my point. I turned to him and I said, you need to figure out if, unless you're going to be average in the industry and pretend you're not, if you really want to be different, you have to figure out what's unique about you, and then figure out how to exploit that. Exploit is a positive economic term. It's not a negative human term. How to exploit that in your marketplaces. And so this is a huge component of what's coming. As these things roll up, as you present yourself for sale into the process, if you resist the process, especially if you decide to stand on your own for a while, you have to be able to stand out as unique and have something people are going to buy. Now, the chart I have here is Michael Porter's work. He's a microeconomist that's famous. And the point of this is this: you can compete on cost, or you can compete on differentiation. You can compete in a broad market, or you can compete in a narrow market. I will say this about cost: do not try to compete on cost. I hope there's a lot of heads nodding on this webinar. If you compete on cost, it's a downward spiral to death. And what that means is, if you want to be the low cost guy, the next one to be the lowest cost guy will come in and undercut you until either you fail or until they fail. And if that one doesn't win, the next one might. And the point is, your margins go away, your business is tough. And my point is, why would you want to be that way? If you can find a unique differentiation, then you can build your own company based on that. You can build your own network to sell to private equity based on that. You can hold out as an individual company in the process of consolidation based on that, but you cannot do it if there's nothing different about you, and you can't distinguishable, right? And you cannot do it if you're focused on cost. And so that's a conversation we love to have with our clients. And there's a lot of very interesting work that gets done after we acknowledge that's an issue and then try to fix it. All right, let's go to human centricity. Watching the clock here. I'm going to leave a little bit of time for questions at the end. Human centricity simply means, it's my way of saying, our way of saying, that the highest opportunity that you have to be truly extraordinary is to turn on the human factor in your business. And again, we're all decently good or very good at sales at the front desk, delivering the repairs from the back, and having it be financially stable and profitable. All the hassle that goes along with that, those three things, folks, are the baseline to being a good company. From there, what can you do? I talked about unique competitive advantage. Here's one of them. What if you became a company that said, I understand that the human asset is the greatest competitive advantage I have? And if you said that, do you know how the heck to get there from here? And so this whole concept of is, let's study being production centric or human centric. And if we can be convinced by the statistics, which I'm not going to show you here, that this is in fact the way to go, how the heck do we get there? And this is what this concept is about, is as this advantage becomes more discussed in this industry, it's been discussed in others, and we want to bring it to this industry in spades here. How do we do that? The models, the technologies, the tools, the methods, they work every single time. It's here. But I'm planting this in your head because if you don't think this way, this is a source of unique competitive advantage. And if you don't think this way, guys that do think this way are going to start to really have an advantage over you. So I'm planting that seed today, okay? This, believe it or not, this is not me talking to you. This is the private equity world. The information here is this. All industries together, if you have your tangible assets together at the bottom of the chart, you'll get a 1 to 2 times net profit or EBITDA number from your future investor. That's all industries. Our industry is running 2.5, 2 3/4, 3 times EBITDA at this point, and 3 times net as a typical sales price. But you see what happens when the private equity guys find the stuff above on the top of the page? They'll pay more for the company. They pay more because it's the human factor turned on. They'll pay more if they lift the hood on your company and find your social capital, which is your brand, your culture, and your market reputation is dialed in. If your human capital is dialed in, your leaders and your team, if your customers are dialed in, that you have the best customers in town, the loyal brand ambassadors, and they are loyal to you, not just as a concept. And finally, the structural piece is, have you dialed these human pieces in so that they will be saleable to the next owner? You can double, triple, quadruple the price of your company if you've dialed those things in. So lest you need proof that human centricity matters, look at what the PE firms see as power levers in the investments that they make, and you can see why we're heading in this direction, among others, okay? All right, 2 more trends to go, and we'll leave a little bit of time for questions. Number 6, from our perspective, is mastery. How do you light up a human-centric model, right? And mastery is our view of the key. All adults in their life, in every aspect of it, personal, professional, and every skill, even within the professional life, we all go through these learning stages. And you've seen some of this stuff before, but I want to put this in front of us and consider it for a minute. You start in a new thing completely unskilled. And it's kind of a funny thing to say, but you're unconsciously incompetent. You don't even know what you don't know. As you begin to learn, you move in what we might call into the apprentice phase, where you start to become conscious of your incompetence. You start to realize, oh my gosh, now I've learned a couple of things. Look at all the things I don't yet know. As you learn as an apprentice and grow, you move into the journey person or journeyman space where you are now consciously competent. Your skill set's pretty broad. You can exercise it pretty well, and you are able to differentiate yourself from your peer group and do good work. And the longer you do it, the better you get. There is a little wall there into mastery, simply meaning that if a serious journey person keeps learning new things and trying new things, they enter into this mastery zone. And the mastery zone is where you become unconsciously competent. A master is a solid, well-performing journey person who has these other characteristics. They are the people that want the projects nobody else can solve. So you got a journey person when you say this is a tough one, they'll go, give that one to Bob. A master's like, ooh, that's what I've been waiting for. Give it to me. And the concept is that they've been so good at this for so long, the only thing that really turns them on anymore is going out beyond where they're comfortable and learning some more stuff. Like I said, folks, we all work through every one of these journey components in every aspect of our learning in our life and our professional life. And so this idea of let's understand this, let's turn around and apply this to our company. I will say to you that you want to be in a human-centric environment, a mastery-driven company. You want to have a pipeline inside for your people professionally to move up this journey. When you promote them to a new place, they will slide down, but then slide back up again into mastery. If you have to go outside your company to find help, new employees, right, new leaders, that you're looking for masters when you do that, and we can teach you how to find them. And there's a language that masters use that the rest of them don't, that we can show you how to speak it. And when you do, your life changes. We take this far enough with clients that masters begin to call them, because the word's out that this is the kind of company they are, and they literally call and say, hey, I'm a master. And I don't mean they call themselves that, but they can, if you're a technician, even have a certificate that says it, right? But I mean, they're the best of the best in the business, and they call and they say, I know you guys, and I know your brand, and I know what you're known for, and I want to come work for you. Next time you need somebody, put me on the recruit list. Can you imagine in the world we live in, instead of us chasing talent, if the talent calls us and says, can I come join you? This is where we go with a mastery-driven organization. I put this in here because it's just a good thought process, a point of demarcation from, again, you're looking for unique competitive advantage. Let's look at Simon Sinek's teaching about the golden circle. Simon Sinek's kind of an influencer in some of the areas that we're talking about here. Most organizations are what focused organizations. They look at the jobs and the tasks. Y'all probably worked there somewhere along in your career in this industry. The how-based company is all about differentiation, value in the marketplace. That's a higher level company. But he acknowledges, we've been talking about for decades at this point, the highest level company is a why-based company. And a why-based company focuses on meaning, both within their own company and the impact that they have on the community. That matters to the people who work there. And guys, the motivation in a why-based company comes from inside of your people, not from outside manipulation, if you will, with bonuses and pressure and threats and that kind of thing. A why-based organization is full of masters who are self-driven. And your job in that model is to work on the business by helping guide them to their own success. And when they do that, your results go through the roof. And I'm telling you over and over again, it works. We've done it in this industry for going on 8 years at this point, and you can do it too. We know how. You can learn how, and that's all we want to say. But look at this. Go back to our mastery model. Think about your team. This is where apprentices live in their development. This is where journey people live in their development. This is where the masters live in their development. Applies to customers too. Guys, here's your transactional customer, your $39.99 oil change. Thanks for the list of inspection elements. I'll take it to my brother-in-law and we'll do it in his backyard on Jack's, right? This is the committed customer, better than your transactional customer, but something goes wrong with them. They're probably going to go somewhere else. They're not fully committed. You want the master people. You focus on meaning, the motivations inside. Same thing with the customer. Your covenant level customer, your loyal brand ambassador is focused on meaning, and their motivation is to align their meaning with yours. Guys, you can screw up their stuff, and when you make it right, it makes them even more loyal. It doesn't make them go away. So what kind of a company do you want to be? We're building a why-based company. We get it. That's what we're doing here at the Institute. And I'm just sharing that with you. We get this, right? We want the best of the best. We are the best of the best, and that's what we're building. These methodologies are in front of you guys. These are the trends, right? And here's the point. If you do this and nobody else in your town does it, you will have a competitive advantage that puts you in front in your marketplace. So we're talking about how are you unique? How do you leverage this? This is a way to do it. Final trend, Kent, I'm going to assume I just keep blowing and going, and we'll leave 5 minutes for questions.
Yes,
what
sir.
does it all boil down to, everybody? It's this, right? You need a breakthrough strategy, not a typical industry strategy, not what I've always done strategy, not what I've seen the other guy that was about like me do strategy, but a breakthrough strategy, something completely different. And I want to say, by starting here, are we evolving still as an industry, which is the 7,500 years of our existence that we've been doing this? We've been slowly evolving, or are we at the point of revolution? And with all the stuff I've talked about today, it's my proposition, my suggestion to you for you to consider is that potentially we're at a point of revolution. So if you look at the noun definition of this, right, it's a forcible overthrow of a government or social order, our industry social order, in favor of a new system. Are we at the point where we can do something different as the top 10% and lead our industry to a new and better place? Or are we going to be the victims of whatever happens to us going forward? It might have been relatively safer to just be quiet and keep your head down in the past. Going forward, there are new factors in our industry that might not have our best interests in mind. So we're big here at the Institute with what we're building of saying we're looking for owner, operator driven solutions to do this revolution, to be out in front, to create a new system so that we have control of it as much and as long as we can, and that we, our people, our customers, our communities are the beneficiaries of it as we go as well. So that's what we're seeing. It's what we're proposing to you guys to think about. A couple of models here. I'll simply say this. There is a different way of looking at your business as an investor, which is this model, to looking at it as an operator, which is this model. I will say to you, without unpacking them here for time, both models matter now, right? We've lived on this page for 100 years. The prior page is what the investors are going to ask us to become. My proposition is understand their world, build a company that does both of these things well, put yourself in a position to have the most options you can down the road, and then we'll go from there. Okay, you'll have the most options of anybody in your peer group. So here's some questions for you to consider, and I am closing in on a minute or two for questions, okay? Why did you get in this business in the first place? What do you need to do today? Serious question of self, not self-denied question, lightened up, but a real one. How do you need to improve your business to make it as deep and strong as you can? How could you grow your business in the future? How much? How fast? Both what you think, and then if you dreamed really big, what might it look like? You don't have to know how to get there, but start thinking outside the box and getting bigger. What do you want out of this business this year, next 3 years, next 10? If you can begin to articulate that, now we're beginning to get to a point where we can have an exit strategy conversation together. What's your current exit strategy, right? As you best can see it today, when, how much, to whom? Think about those things. And you may never get there. It could be 10 years out, but start thinking about the end now and we'll plan into it, not fall into it backwards with our eyes closed. And the final thing is, at the end of the day, biggest question here is, what's the legacy that you want to leave from your personal life, your professional life, and your business's life with your employees, your customers, your communities, and the world at large, right? What's the legacy issue? And again, if we can identify it now, we can back into building a company that will help you get there. So here's the trends. We've been through all of them, and they're all there, right? You can ignore them, you can run into them and go surf on them, or you can get out of the business and never have to deal with them. But these guys aren't going anywhere. And so that's kind of what today was about, was just a familiarization. Remember, this is what we wanted you to take away. Aftermarket change is happening. It's only going to get faster. You all need to have a breakthrough strategy so that you can be in front of your future. And we're just going to suggest that maybe empowering your peeps is going to take you further, faster, and get you there. So that's it, folks. And I'm stopping now for questions. Tori, I saw you pop up, and Kent, you might have collected a few. So we got 3-4 minutes to go. Kent, what might you say?
I'm just going to open it up for questions. This is
There
a
you
great
go.
opportunity to ask questions. If you do have them, we're right here. We can answer them, but that also doesn't mean that this is the only time you can get those questions answered, because you can email us.
Exactly.
Michael's email's there, his phone number's
Yep.
there. You can talk to him directly. Todd, what do you think about all this?
Well, there's a lot to take in, especially at the beginning. But yeah, I mean, it gives us a lot of things. I think all of us would probably have to say that we've been thinking about it in some way or another, how it's going to happen. May have a couple ideas, but it's definitely a lot to consider about even building more value than we think we already have.
Yeah, and let me add to that, Todd, if you look at the industry bell curve, the average company has, in your industry, out of that 40,000 has what, 6 employees, 4% profit margin, right? And those are the guys that are at the peak of the bell curve. So I'm not making fun of them, not saying anything negative. There's an awful lot of players that are struggling to survive today, and this stuff's going to create waves that are going to drown a bunch of them. And, it means that if you can build a strong shop and you can see a future of being available to help those folks as they exit, to help their customers, their teams, there's more opportunity here, folks. Than, like I said, once in a lifetime, every industry comes to the mom and pop point where it's time to do this. We held off for decades, literally, and now it's our time. So there's a lot here, but there's an awful lot that if you can get your arms around it and start to walk. And our whole thing is like, look, you don't need to understand it all. Sit down, figure out where you are, take step into the river, get your toes wet, right? Start walking down it and see what happens. Pretty soon, all of a sudden, it starts to make more sense. Things open up, and you don't have to have a final plan from day one to change from where you are. So again, it's a privilege to talk to you guys. I'm not wrapping up here, but I'm saying there's an awful lot more to unpack in all these things, and we're excited with Nawaka, with y'all. We want to just keep putting new stuff in front of you and helping unpack it and give you more and more to think about. Got the tools, some solutions to get started, that kind of stuff. We're here. So thanks for that feedback. It is kind of overwhelming, but we just sort of wanted to get it all out there for you to think about. So thank you for that.
Micah, what do you think? What do you think about all this? What are you chewing on?
Me? Some of the stuff you're talking about, it's already happened in the collision industry. So,
Yeah.
and I'll always tell, because we have mechanical and collision, we do both. But it's don't let them do what they did to the collision industry. Don't let it happen to your shops.
Yep. Yeah, and Micah, let me add to that. There's a little bit of a difference between the traditional collision industry and ours, and you know this, right? Because you stand in both camps from the standpoint that the collision industry is funded largely, not solely, but there's a big chunk of the payers are insurance companies. And those guys have volume and they can try to walk into your office and say, this is all we're going to pay. And then you got to decide what you're going to do with that. In our case, on the general repair side for you, our customers are the payers, which means that little extra, managed healthcare is the same problem on the healthcare side. The big insurance companies trying to dominate the collision business, that's that side's problem. We don't quite have that much leverage financially from the customer side. The user and the buyer are the same thing. So, you stand with a foot in both camps. We don't have that insurance overhang that's going to whack us and be a little bit easier than you've been through on the collision side. I'll tell you that. So.
Yeah. They just like stand your ground. You know what you're worth and charge for it. And
do it. And
our
when it
mission
comes time
really
to,
is. Oh, go ahead, Michael.
I was going to say, when it comes time to sell it, hold that thought. Stand your ground, build something that's worth something. Don't let somebody tell you, well, I'm going to do you a favor and I'm going to give you a discount. I don't know. You guys are in charge of the value of your company and the disposition of it. And the investors need you more than you need them. There's more of them lined up to talk to you. If you don't like them, kick them out and talk to the next guy. Don't forget that. Okay, please.
Our mission really is to put the control of this industry in the hands of the automotive professionals that have built it and brought it this far. Absolutely. And we don't want to have happen with collision happen here. So please, we're going to share this information. If you do have more questions on this, or you need help with this, or you just want to understand this a little bit better, that's what we're here for.
Yep. All right, we are at the hour plus one or so. So to respect it, I think the protocol's probably stopped now. Maybe yes.
We'll wrap things up. Again, if you guys have any questions for us, I posted Michael's email in the chat. That's masmith@wearetheinstitute.com. You can also reach out to me, Kent, at wearetheinstitute.com, or you can visit us on our website at wearetheinstitute.com. Thank you guys for having us and letting us share this information with you during your lunch and learn.
Thanks, guys. Thanks for everything.